Hey, good morning, guys. Hope you guys having a blessed day on today. I know I am. I'm going to be jumping on briefly, guys, just to break down Pepsi versus Coke. Yes, that's right. Which stock should you invest in? Now, granted, I'm not a stock advisor, not a financial advisor, guys, just merely an educator. Just going to show you guys some tips, some things that I do when I'm looking at stocks. I do not own the rights to this music. Okay, guys? I'm going to jump on briefly, all right? Again, good morning to you guys. And if you are jumping on, guys, I always love your likes and your shares. I always love your comments. So feel free to chime in with any questions you may have about any stock or any financial advice, guys. Please put them in the comments. Give me 1 second as I actually share this out. Tag some folks. Good morning. All right, guys, let's get into it. Got this music playing this morning. Reminds me like when you play basketball, you know what I mean? You gotta have some music, get yourself warmed up. Gotta have some music, get yourself going. So let's go ahead and shut this down. I'll turn it down some. All right, guys, let's go ahead and get started. So, good morning. If you guys are just jumping on, again, my name is Michael Davis, guys. I'm jumping on this morning, guys, to tell you or actually show you the process I go through and the research I did on Pepsi versus Coke. Now, I know you guys say, hey, you know what? When you invest in these companies, most of you all are already invested in these companies by drinking Pepsi, by drinking Coke, right? Every day. I did a little research here. The products that actually Coke have, I'm going to just to name a few. All right, they have, of course, the Diet Coke, Sprite, Fanta, Minute Maid, Powerade, and vitamin water. Okay, that's Coke. Now, Pepsi, on the other hand, they kind of virtue out a little farther. Pepsi not only have drinks, they have Doritos, they have the Brisk Tea, Cheetos, Ruffles, those Tito's, Sierra Mist, right, and Fritos. I know some people may not actually like Sprite. They might like Sierra Mist versus, Sprite. Now, also, too, with Pepsi, they actually merged with Starbucks, which is a big thing. They're doing drinks now with Starbucks. That's awesome. So now you're saying, hey, you know what? Yes, I may actually like Coke versus Pepsi. Again, you guys already invested into the company. Now I'm going to show you guys how to actually invest into their stock, okay? So I did a breakdown on Pepsi and Coke again. And good morning if you guys are just jumping on. Again, I won't be on long before you. Just want to show you guys the difference between Pepsi and Coke and which one I would go with if I'm buying a stock. Okay, so let's go ahead and kick this off. So Pepsi have a dividend yield of 3.18. So 3.18 with Coke 3.71. All right, you may say, hey, yeah, Coke have the higher dividend yield. So Coke wins on that one, okay? That's one of the first things I look at is the chart. So now when I looked at the chart on Pepsi and Coke, both companies were actually in a bull market, meaning the prices were going up until we had this little hiccup with the virus. Okay, that actually caused everything to go down, prices to drop. But that's one good indication you want to look at. You want to look at what the company has been doing before this virus hit. And again, Pepsi and Coke, they were trending up. So that's a good indication. Okay, yes, it's a good company. So then I move on, all right? So I look at the 52-week high. Right, so Pepsi right now trading at the 52-week high was $147.20. Okay, and their stock is over $100, whereas Coke, their stock It's around $43 or so. So their 52-week high was $60.13. All right. So now, you look at the interest, the debt that these companies have on hand. Okay. Pepsi have about $1.1 billion in interest expense. Interest expense, again, if you had a credit card, you go to the store, you spend something, same thing. So they have a credit line or credit out there, $1.1 billion, whereas Coke have $894 million. $894 million. So again, Coke, they're a little cheaper on that end. All right, so now look at the net. Okay. The revenues, I don't really too much care about the revenue. Why? Because it's not much. It's not about how much money you make. It's about how much money you keep. Okay, so I always look at the net. You can look at the revenue, which is fine. But what are these companies doing? What are they keeping? Just like me, right? I can make all the money in the world, but what am I keeping? So now I can actually save, and not only save to actually make money. See, you save money to make money, and people always get that misconstrued. Okay, you don't save money just to hoard. You don't save money just to hold on to it tight. You save it to advance your kingdom. Okay. All right. So that's the net. Okay. So the net was $7 billion for Pepsi and $8.9 billion for Coke. So Coke actually wins in that aspect. They actually keep more money than Pepsi. Now, not necessarily saying Pepsi not doing a good job. I mean, $7.3 billion. That's a lot. Okay. So these companies are very similar. Okay. Only really discrepancy with these companies, really, Pepsi has a higher stock versus Coke. Pepsi over $100 right now, Coke under $100. So again, if you're trying to look at your finances, say, hey, you know what, I can do this or I can't do it, you might go with Coke over Pepsi just because the stock price. But again, you don't want to buy you don't want to buy into a company because of the stock price is low. You don't want to do that, guys. You want to look at the stability of the company, how good is the company, right? Check out the financials on the company, and say, hey, where will this company be 5, 10, 15, 20 years from now? I know we can't predict the future, but if you look at their financials, look at their company model, you can actually give a good inclination on where it's going to be in the future. Okay? So now, next thing I look at, guys, is their net worth. Okay? The net worth on hand for Pepsi is around $14 billion compared to Coke, $18.9 billion, almost $19 billion, guys. And then again, that's net worth, right? So your debt versus money you have on hand, subtract that, it'll be your net worth, guys. Just keep it simple as possible. Now, capital gains, or the capital, okay? The capital for this particular company, Pepsi, is $169 billion versus Coke, $186 billion. So the cap, guys, is basically what the company would sell for today. Right, so Pepsi would sell for $169 billion, which is a lot of money, versus Coke. They would sell for $186 billion today if they say, hey, you know what, I want to go ahead and get out of the business. But again, so Coke wins in that aspect as well. They would sell for a little more than Pepsi today. All right, these are one of the really, really big things I look out for, guys. All right, so now you look at, we already looked at the interest that they have on hand, the debt. We talked about the revenue. We hadn't share revenue numbers. We talked about the net, how much money are they keeping. Now, cash on hand is huge. Why? Because I'm going to give you an example. Like yesterday, my wife, she was looking at her financials, right? She told me Disney bought land on yesterday. And think about that. So a company buying land in a recession or a down market, that's a boss move right there, okay? So Warren Buffett always talk about that. When people are fearful, that's when you buy. When people are afraid, that's when you be fearful and just sit back and wait. And his strategy is he'll pile up his money, sit back and wait, pile up his money, sit back and wait until a time like this where there's a bear market or slight recession, okay? And then he'll stockpile his money, and when the opportunity strikes, he'll take advantage of that. He'll buy companies when they're about to go out of business. He'll buy stocks. Not necessarily saying he's a bad man. I mean, that's not the case. It's survival of the fittest, really, and he wants to expand his kingdom. He wants to expand his net worth, so to speak. So he's buying up all these companies, buying up the shares of stock, guys, and that's the model I follow. Okay, so cash on hand is huge. Let's go with that. Pepsi have $5.74 billion on hand in cash versus Coke $6.48 billion. Now you may say, hey, you know what? That's a lot of money. It is. It actually very close. I mean, 5.7, 6.48, that's close. But now if you look at short-term investments, okay? Now when you add cash and short-term investments, let's see who's number one versus number two, okay? So short-term investments, Pepsi actually have $229 million on hand to invest, okay? Versus Coke, they actually have $4.7 billion on hand to invest. Okay, so now total cash, total investments for Pepsi, it's about $5.74 billion, whereas now Coke jumped up to $11.18 billion. Okay, all because of the investments they're putting in, all because cash is on hand. So now, like a down market like today, they can still take care of their employees, right? We talked about the dividend yields. I mean, it's pretty high, a little high, 3.18 and 3.71. But guess what? They're able to pay dividends to their shareholders and expand or invest in their company. That's what you want to look for in a company, guys. Okay, so now, $5.7 billion Pepsi, $11 billion Coke. You may say, hey, Coke have the upper hand. Yes, we talked about that. Coke pays a better dividend yield. Coke has more cap, okay? Coke has less debt. Coke has a bigger net worth, all right? Coke has more cash on hand. So you may say, hey, you know what? I would go with Coke. And, you know, that's not a bad decision to make. Me personally, I actually have Pepsi and Coke, to be honest with you. They're number 3 or number 4, or they're in the top 5, rather, let's say that. They're in the top 5 in the consumer staple section, or sector, guys. In the consumer staple sector, meaning these companies are vital companies in our community. These companies you would still shop at, okay? I do have a list. Let me grab it. Right now, the top companies in the consumer staple sector, okay? I did a video on this, how to actually build your wish list, guys. This is one of the things I do. I don't just shoot darts at a wall, do my research. I do my due diligence, guys, before giving information to you or for me actually even using this information. Okay, so the top companies right now, number 1, Procter & Gamble. Number 2, Coke. Number 3, Pepsi. Number 4, Walmart, guys. I'll go with the top 4 right now. So in that particular sector, that's what you have, okay? So, I mean, Coke and Pepsi right behind each other. And as you see by the financials, Coke right now, they're actually a better company than Pepsi. Now, can you go wrong with having both? No, you can have a diversified portfolio. I have Pepsi in my portfolio, and my sons have Coke. Okay, so I mean, again, you can't go wrong with either one. Again, do not base a stock off the price. You want to do your due diligence. And what I did was what you call a fundamental analysis. A fundamental analysis is when you actually go through the numbers. Okay, fundamental analysis tell you what to buy. Okay. Technical analysis, when you look at the chart, tells you when to buy. All right. So again, write that down. Fundamentals tell you what to buy. Technical tell you when to buy. So when you're looking at the chart, you say, hey, you know what? Hey, the market's going down. I want to buy now. The fear of missing out will have you making bad decisions, guys. Okay. The fear of missing out will have you putting all your money into the market, and it's a bad time. Okay. So right now we had the unemployment rate came out. Okay. A lot of job losses right now, which is unfortunate. You don't want anyone to lose their jobs, guys, okay? But at the same rate with the market, it's a correlation. So you have these things happening. We have jobs going out of business, guys. This actually drives down the stock market prices. So you wait until you put your money in. If you guys have $100 or $200 or $1,000, you don't want to put it all in the market. Buy slowly, okay? If you're interested in Pepsi or Coke, buy Pepsi or Coke today, okay? Do what we call dollar cost average. So if you buy a Coke today, let's just say $45, okay? And the price continues to go down. You keep buying it. You keep buying a share. You buy a share every time you get paid. All right? Buy a share every time you get paid. Now you may say, hey, you know what? What if price goes up? You still buy it. Okay? You want to build your position in that company. All right? The stock market is not about putting $1,000 in today and just letting it sit, and you're going to be rich 20, 30 years from now. No, you're going to have to work. You're going to still have to put money in that account, $50, $20, whatever you have on hand, guys, okay? If you guys have any questions, I would love to take them in the comments area, guys. If you're jumping on in the comments, tell me where you're chiming in from. Let me know how you're doing with this coronavirus going around, guys. In the comments. I'm doing fine. My family's fine. Thank God. Just taking it one day at a time. That's all we can do. If you have any questions about what I just talked about, please, please, please feel free to chime in or drop it in the box there, okay? If you guys say, hey, I want to learn more about stocks, I want to learn more about financial advice, I do have some things on that, guys. If you inbox me, I will share some things with you. This video was about Pepsi and Coke. I'll probably do another video tonight or maybe tomorrow morning about how can you advance your financial literacy or accelerate your financial literacy so it can take you to the next step. I know this is a rough time for people losing their jobs, people not having an emergency fund on hand, but guess what? God is in control. That's one thing we can't forget, okay? And everything will be all right. So now let's take what we can learn out of this. What can I do to better myself the next time when I start working again or when I go back to work, when you start making money, whatever the case may be in your situation? What can you do differently next time, okay? So again, if you guys need help with anything, I'm here. Good morning to all of you watching. Good morning. What's going on, DeMar? What's going on, man? What's going on? How you doing? Miss Blanding, okay? Pepsi? You going with Pepsi? Again, that's Pepsi versus Coke is not a bad decision, okay? So I just did the breakdown. If you missed it, go back and look at the replay. Hey, how you doing? I love you too. Love you too. What's going on tomorrow? Let me get a drink of water, but yes. So if you choose Pepsi or Coke, you really can't go wrong. And as you can see, I mean, they're respectively right now, and I know it can change at the drop of a hat, but respectively right now in that sector, consumer staple sector, they're number 2 and 3. Walmart number 4. Procter & Gamble number 1. Coke number 2. Pepsi number 3. So again, you can't go wrong with that. I hope you guys are having a blessed day. I know I am. I thank God to be living on this day. Just thank God to be here sharing information with you guys. Again, we're here to help each other. I always like to say I don't know it all. So if you guys have anything you want to share or chime in with, please feel free. But again, if you're just jumping on, guys, please go back and check the replay. And when you check the replay, please like, shares, comments, anything you may have. Yes, toilet paper is booming right now. So if you're in that industry, in that sector right now, or you actually have a company in toiletry or toilet paper, guys, it is booming right now. All right, that's a good one tomorrow. So that's what you look out for tomorrow. So next time, or when you're building your portfolio, you want to look at the things that are actually moving. Okay, or when the prices drop again in the market, you want to look at what can I put to my portfolio. So you're thinking, you have your thinking hat on this morning. That's what you should do. How can I take advantage of the opportunity? Yes, right now it's kind of bad. People are losing their jobs, but how can I take advantage of it? And how can we, as a people, build this gap so next time we'll have our emergency fund in place, we'll have our financials in order, we'll have our credit fixed, we'll have the whole thing taken care of, guys. We can do that together. Okay, we can actually do that. And I can help you out. That's what I do. And yeah, so again, guys, thank you for jumping on. Thank you for chiming in. Please go back and look at the replay, guys. And again, when you look at replay, type in the comments replay so I know you watched the replay. All right, have a great day. This is Michael, guys, signing out. I will talk to you later. Bye.